Good evening, everybody. Welcome back to the Russell Journal. I am Russell, and this is my journal entry for Tuesday, October 26th, 2022. So the very first thing we're going to deal with business is what actually happened to me and to the account today. As you can see, we got the chart of SPY behind me, and from this side over here, when I move, you will be able to see that in the after hours, the absolute beatdown that SPY is taking as a result of earnings reports from Google, Microsoft, and Amazon. Over on this side over here, you can see the straddle that I'm holding on 393 or 383. You can see both sides of that are red. And overall, my account has gone from about $1,500 to a little over $600 at this moment. And I'm trying to kind of figure out what to do here. Obviously, I'm stuck in this trade over here. I'm stuck in this trade over here. If I do this. Okay, great. And as far as things are concerned, it is becoming more and more challenging in order to continue to do this. So what exactly happened? Yesterday, I went from bragging about my infinite trade idea to my now I am completely and utterly humbled. Well, basically what happened is I overslept this morning. And I missed my entry on my next position, which I was hedging with my put yesterday, if you remember the put from 377, which would have been fine. Everything would have worked out well. We got the rise up. We had a big run up today and everything like that, but I missed it. And by the time I woke up, instead of being able to catch the run and get the profit that would balance out the infinite trade setup, I had missed that run, and I was red enough on that put that there was really no coming back at that point. As far as where we are today, I am a little bit confused as to what is going on and what I will do and what has to happen. Right now, it's a little bit of hold and hope over here and see which way may possibly save me. The complicated part here is we still have Meta's earnings to get through, Amazon earnings to get through. Those two sets of earnings going into this week or into the next 2 days, and these contracts expire tomorrow. So you're really in this, I'm in this spot where I don't really know what to do or how to fix it. What I do know is it is possible that I will be able to hedge both of these positions off of something, but at the moment my buying power is sort of non-touchable. So we will see how this plays out. One of the good news is one of these is not going to expire worthless. One of them will expire worthless, and I will still have that capital to work with on whichever contract that is. In the event that we do catch the run up tomorrow, we will see. What's happening in the after hours right now is definitely changing some of the dynamics of the market a little bit, and those earnings, again, Google had their miss on earnings, and so I don't really know. Okay, so we're going to jump into the charts and we're going to take a look and find out or try and figure out exactly what it is that we can do or I can do in order to be successful here. So SPY basically got up to its upper Bollinger Band today on the daily time frame. It extended beyond that a little bit. What pushed this up is, again, those earnings, the potential of those earnings coming out, I think drove it a little bit. Some of it is a short squeeze that came out a bit, and the last piece of it is a little bit of the Fed pivot sort of narrative. Again, if you are investing based off of a Fed pivot, this is a stupid idea. If you are trading based off of a Fed pivot, it is a good idea. Normally, however, the bad idea is to try and trade when you break above a Bollinger Band. Usually what you want to do there is all hands off the table. And especially holding through earnings. Also, we have PCE data coming out on Friday, so that's going to be some really, really difficult. Things to go through. As far as where we are on the chart and where we are within the behavior of the chart, you have your trend up. You have your bias is still to the upside of here above the 18-day moving average. You are overbought, but your momentum is still up. Okay, as far as the end of today goes, how will this dictate what traders do tomorrow? So the one thing about it is the earnings that we're definitely getting the selling off from the earnings. Okay, that is something you're getting, again, your earnings compression. That is something we've been talking about on this channel and has been coming for a long time. In order to see inflation come down, we need to see earnings compress. Can we go over to the weekly chart of this? Okay, the big things to note here are, one, again, if you look at the slow stochastic on the weekly chart, on the daily chart you're overbought, but down here you're still oversold on the weekly time frame. Okay, getting into this, this see how you are down there. Again, if the bulls can push this out of here on the weekly time frame, you'll get a move to the 18-week moving average there at 388, and you can see we dang near got there today. Okay, so it almost made it today to that time frame, or to that number. So you have a lot of potential here still. And the bulls will need to put up a fight. The two problems we have on the bull side is, one, the bulls are struggling with liquidity. Liquidity is a problem for them. And where you can see this, if we switch over to a 5-minute chart. So if you look at this chart, there's a lot of stuff you can see. You can see that we get the initial run up, and that's really good. But what you also are catching here is that okay, so you reach this point up here, right? And this is where your if you measure your Bollinger Bands based on the average closes, you hit this target and then you sold off back down into here, okay? Now, what you have going on through here, and you can tell from the wicks on the bottom of these candles, is that the bulls aren't really trying to rally this market, okay? You can see a distinct difference between what happens here, okay, where it's just a straight drive up, okay, on momentum, and the bulls are willing to drive here. But they get to this point and they're no longer willing to push the same way they were before, right? It's not this here is your rocket ride, and then over here you get this slow kind of grinding up into the price target, right? And then from there, you hit this, and the thing that's funny about this is if you hit this and we went over to, we're not going to go back to the daily on this, but just know this is basically where your Bollinger Bands are at if you measure them based off of the average of closes, this is your top Bollinger Band. And you get this pullback into the lower band here, okay? And just right as you get oversold on this 5-minute chart, you see the push. And it's not an explosive trap type move here, okay? I'll switch over here so you can see it's not an explosive move. It's a grind. It's a push. It's pushing up, okay? This way, okay? And they get this push up. And what they're doing here is they're basically hunting short position stop losses, okay? Now, anybody who is traded the market and knows that you get up here, which is kind of the daily, the daily Bollinger Band, they're gonna know that the bulls are gonna want to take it off the table and money off the table. They're gonna want to take profit. So if you're looking to short, you're gonna want to short into some more selling, okay? Because that's going to create your momentum to the downside. The second thing that you're going to know here is those Bollinger Bands are designed to keep price trading between them, okay? This is the market maker's tool, trading between them, okay? So what you have happen here is the bulls basically let these guys short into the market here, and then they began slowly pushing back against them. You know, and now some of these candles had some pretty interesting action in them, and you could see those stop losses triggering, right? But you can also see, again, as we got up here, the selling that comes along the tops of these candles. There are guys who are shorting into this market here. This is their first short position entry. And if you're looking on the weekly chart, I would say that if you really are looking to take on a short position of size, as we get to the 18-week moving average, you're going to see a lot more selling pressure on top of all of this. Because the overall truth of the market right now is that it can't really go up, okay? It can't go make all-time new highs. So, however, we have some stuff that the market has to figure out, okay? So basically what the market needs to figure out is how valuable is earnings? Did they do well? Are they going to continue to do well? How is that going to work with the Fed? Is the Fed going to raise rates more because earnings are good? Or are earnings going to be bad and the Fed's going to be begin to start to think about slowing down as far as pacing the rate hikes? Now, again, if a lot of this sounds confusing or stupid, it's all confusing and stupid, right? Most people should really be investing based on the merit of a company and its ability to produce a product and to sell that product or that service, whatever solution they're providing. The problem is that you have a lot of people who buy and invest based on leverage. And because of the cost of money, that also has a cost on their leverage. And with the cost on their leverage, they have to price that into what they're doing. And a lot of what you have in the market is what they call froth. And a lot of that froth is because a lot of people are still sitting on top of a lot of leverage that is becoming increasingly more expensive. So we don't really know how much anything is worth. It would be one thing to say this company earned $100 million and for that $100 million we paid $10 for every dollar. And if it was real money, that would be great. But because it's not real money, because it's fake money, because it's leverage, and that leverage has a value to it, it makes things even... sorry, I don't even know what to do with my hands. It makes things more complicated. So where do we go with that? How does the market price that? What are we going to do with it? And the thing is earnings have to come down in order for inflation to go down. Inflation has to go down in order for the Fed to lower interest rates again and go back into an easy monetary policy. If you're trying to front run the Fed or figure out when they're doing that, that is a very bad, that's more of a gambling strategy than an investment strategy. So if I was you, I would wait until I saw the Fed knew what was going to happen and they were going to begin to do their quantitative easing, and I would not try and pick the bottom. Now, that all being said, I am also the idiot that put that trade on, so take it for what it's worth. In the meantime, as far as fixing this account goes, we will see in the morning, and I will let you guys all know how it works out tomorrow. There is a good chance this is the peak. We get a sell-off. Biggest earnings really coming into tomorrow is Meta. Meta can't be good. They're burning money building the metaverse, which is Facebook. And other than that, you've only got Amazon. Google took a punishing tonight. I have it up here somewhere. Back up here, there's Google. And yeah, so I have Google up there at the top over that shoulder. They took a beating. Microsoft, they beat on earnings and they still took a beating. They're hanging tough. They're doing all right as far as things go. But again, Meta and Amazon. And the thing you have to realize is that all those tech companies make up 27% of this index. Now, I was doing all right. I held that call all the way up into here, and this is where I should have dumped it, not thinking about Google's earnings. And when Google's earnings had a miss, I'm suffering the wrath of the after hours. That being said, if the Fed pivot thesis still continues to carry on, if that does something for us, then it's very well likely the bulls will come in and run this back up in the morning. Depending, we will. The good news is we will see the weight of how much the market really thinks a Fed pivot is likely, okay, and how much they're willing to buy the market tomorrow based on this. Now, the other good news is you got way up there and you closed up high. So the Bollinger Bands will expand. You'll have a higher price target tomorrow. Again, in the after, SPY's kind of sitting there at 393. So I am at the money on both positions at this moment. At the same time, if the whole thing spooks the market and makes the market think that that there's no way that these companies can save us, it'll sell off, in which case I may be able to cash in on the put side. So we will see. It may be a game of just simply breaking even. Anyway, until tomorrow, the Russell Journal is written, edited, and hosted by me, Russel Liss. We are produced by Social Media Shows. Our executive producer is Maria Pureza. Give Social Media Shows a check out. If you want to start a YouTube channel like this, she can help you very, very much. Social Media Shows and Maria. She's fantastic. And in the meantime, you guys just pretend I said some sort of catchphrase.